Well, I really appreciate everyone showing up today, especially with an 8 a.m. press conference from the Department of War. You want headlines? There's plenty of headlines on there. Fasten your seatbelt. Is it going to be another wild ride on Merger Tuesday? Yes, folks, we got some mergers, we got some earnings. We have David Russell, Vice President of Global Strategy from TradeStation, on at 8:35. We got a lot to talk about, folks. Let's get pre-market prep started right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, folks, don't call it a triple bottom, but it may be a triple bottom in there at the 63.60 level. We're 100 handles away, up 68.5 handles, 64.56.75. Can we get through yesterday's high before we take out that triple bottom? Let's take a look at the buck. The buck is still above par here, down 9 cents at 10026. TLT, don't call it a comeback. It is a comeback, trying to clear the $87 level, up 23 cents at 87.01. Crude, after going bonkers after hours here, it's down $1.60, 128.23. Gold and silver getting some lifts. Silver, the big winner, up 4.4%, 279, 66.31. GLD up 1.6%, 421.20. And Bitcoin futures, let's just call them flat here at 66,800. These charts are brought to you by TradeStation, born to trade. Chart, analyze, customize, all in one platform. And if you want some AI integrated into your trading, we're going to find out more of that when David Russell comes on at 8:35. Let's bring on Triple D. Triple D, another morning, more headlines.
It's just constant headlines. We were talking about this on the STN think tank there last night and saying, I kind of want to be long because, you're going to get a Trump pump here. You're going to get a Trump pump. Didn't come. Like, yeah, he's bound to choose something. You don't like the market being down. You know it's coming. And then at 9 o'clock at night, it actually comes. So first, though, just going with the order, we actually get a Reuters report at 7 o'clock last night that the U.S. was preparing to deploy paratroopers, and the S&P starts leaking because they don't really want boots on the ground. But then the big story comes from the Wall Street Journal at 8:37 last night, and the big story was, and I don't have it in front of me, unfortunately.
I do.
You do.
Trump looking to end the war, even if the Straits of Hormuz remains largely shut. Go get your own oil.
This, my friends, was the big story from last night. And the S&P futures explode on this higher, obviously, because they don't want the war. They want us out. So, here's the situation. This is obviously Trump doesn't like the stock market tanking, doesn't like to see oil prices where they are. And he's now at a situation where seemingly seems like they're going to pull out no matter what. So, we got this presser. So we're going to get more clarity here right now. So the Department of War announced an official press conference here this morning at 8 a.m. So that is going live. So I know I have Michael Feehan in the background watching the presser for us because obviously we're talking to you guys live. But keep us going. Let us know if the presser has started here because we're going to get, obviously Wall Street Journal's reporting, Reuters reporting. Let's get, what is actually happening and hear from Hegseth to see exactly what is going to be happening here. Are they looking to wind down operations? Was Reuters right? And they're actually looking at escalating and putting troops on the ground.
Yeah, there. I wanted to bring that up too. Here. Thousands of U.S. paratroopers arrive in Middle East as buildup intensifies.
That's what Reuters says. And then what WSJ says they're pulling out. That they're actually looking to wind down operations here, no matter if the strait even stays closed. Which is, interesting too. I don't know. It's going to be an absolute, mess over there if the U.S. just leaves. But, the truth here, Michael, if you can post the one that he posted this morning. So there's a lot of information moving target about this, but I'm going to read this. All those countries that can't get jet fuel because of the Strait of Hormuz, like the United Kingdom, which refuse to get involved in the decapitation of Iran, I have a suggestion for you. Number one, buy it from the U.S. Or number two, build up some delayed courage, go to the Strait and just take it. You'll have to start learning how to fight for yourself. USA won't be there to help you anymore, just like you weren't there for us. Iran has been essentially decimated. The hard part is done. Go get your own oil. This sounds like, to me, without truth, is like he's done with the stock market going down on this and he's pulling out. That's what it sounds like to me. Again, conference is here. Hegseth is going to be talking here momentarily. So we're going to get, an update here on what's happening. But it sounds to me like they're done. So, going to be an absolute mess over there. The question is, if the strait remains closed, does oil prices actually go down? We are escalating because we can't get any of that oil through the strait. Does Iran open the strait up once the U.S. leaves? Maybe. That's a possibility. Or do they leave it closed now that they have total control of it and the U.S. isn't involved, and now we just have control of it? Now you're going to pay fees or something to Iran to get your oil through. It's going to be very interesting and very messy. So I don't know if we can necessarily assume that oil just tanks here if the U.S.
demand destruction, though. Maybe people are, I don't know, to start walking. Using EVs. You don't flip the switch overnight. So, also, Iran, they need money, right? And they get the money from shipping that oil. So a lot of different circuits. Is that pressure started yet? Here, I still got Warren on the TV.
They say it started. I know CNBC's covering Warren Buffett. The worst time to have a Warren Buffett interview ever. So, keep us posted. Michael's in the background watching. Let's dig into this further, this truth. And I agree with the chat, and I'm reading into it too. It sounds to me like Trump's done with NATO too. So, he has multiple. He doesn't like France. He put a truth out on that this morning. France has been very unhelpful, telling them to go look at their own oil. We will remember. There's been multiple truths here. It sounds to me like Trump is setting up to do two things. And I don't know. I could be wrong. Maybe Eggs is going to say something different. But it sounds to me like he's setting up to pull out of operations, regardless if the strait is open or not. And two, it sounds to me like he's preparing to pull out of NATO. And that, my friends, is a huge deal for everyone. One person smiling on all of this, the one person smiling on all of this has got to be Vladimir Putin. He's got to be the one person that benefits the most. From the collapse of NATO, this is like the ideal for Putin. He is smiling on all of this. Like, obviously, the Ukraine-Russia war completely has been put to the back burner. Russia wins on all of this, on everything. Russia wins. They're the big winner here, folks.
Well, we will wait. We will wait to see what happens. Gasoline prices topped $4 yesterday. Hitting the consumer from a technical standpoint. Man, we got a hard bottom in there, and 100 handles away. We had
we're moving higher here again now.
Yep, this is the most important day in the history of the stock market, because
Joel's declaring today the most important day in the history of the stock market.
Because if we all roll over and flop like a pig, we got the S&P's got 200 points of downside. Easy. There's just nothing in there. There's nothing in there.
There's also 200 points of upside because there's nothing in the upside either. Get your charts on the screen here, because breaking down the S&P here, and we know the inverse correlation with the USO still exists. Yes, we are rallying. Yes, oil is down slightly here this morning, but that inverse correlation totally exists here. It's been ugly. The S&Ps have been very, very ugly here for a while here now. We can blame the war. And, a lot of this is definitely to do with the war. We're really chopping around. Heggs must be saying something here, so keep us posted here. Because obviously we're trying to talk live, but we're tanking here right now. Well, not tanking, but we're really chopping around.
Don't start acting
must be
like
going.
Tanking. Okay, come on now. We are still up 66.
Oil tankers, tanking. Okay. What do you think on the S&P here? You've got a line there. I like a line. Oh, you're
That's
just
a
betting up the
50%
50%.
retracement of this whole move. And every move has a counter move. And, when we talk with Ken, we are so far from the moving averages and stuff. A 50% bounce in here. I think a lot of people would love to see that in the SPY up going up to 663.61 for that. That's a couple hundred handles away. But I just want to take a step back, from like the whole war. There are other things going on in the markets, right? We are seeing the possible effects of this AI trade,
Oh
right?
yeah.
We are going to see higher unemployment. We were set for lower interest rates this year, right? How many cuts were you going to give, Dennis? Wasn't it one or two or three? And
On the
now
back half, yeah, we
yeah.
were set up for lower. Before the war started, we were set up for lower rates. But now we don't even know if they're going to allow the new Fed chair in. So, and now you got Powell there, and Powell's not cut. So, there's the rate cuts are all up in the air. We don't know, and this isn't a rate story here. Let's be honest. The rate story may have been a story. There's two major stories here: the war and the AI unwinding trade is what we are seeing here now. It started with software, Joel. Software obviously has been hammered for the better part of a month and a half. IGV hammered. Microsoft, we know, leading the charge down. It's just been a lot of stocks really hit hard in software. Yesterday, they came for hardware, and they came hard for hardware. There was so many stocks absolutely hammered yesterday, led by Micron. You could say, well, this doesn't make any sense at all. It's 3 times earnings. We've been saying those earnings are cyclical, though. They've always been cyclical with Micron. If, memory, the bottleneck starts to ease up, memory prices will come down and Micron stock will come down as well. But right now, the hardware unwind trade, which I'm getting hit on in my long-term portfolio because I was thinking hardware was a safer place to be, obviously not. And when bear markets get bad enough, they eventually come for everything. That is really the truth of it. This bear market has gotten really ugly now, and now they're selling leaders, probably some people to finance laggards because you're hammered on a lot of other stuff. So you're starting to raise money elsewhere. But yesterday was not the software sell-off. IGV was actually up yesterday. IGV held up. Yesterday was hardware. Yesterday got hit hard. Micron down significantly. I think it was 8% at the end of the day. SanDisk had an awful key reversal. Was up in the morning, closed lower. Ugly, ugly chart. Western Digi, which gets defended today by Bernstein. They actually upgrade the stock into the weakness here, which we can talk about later. That got hit hard. My Nebius, I don't own it yet. I've liked it for a while here. I said I kind of liked it at 100, but I talked about it yesterday. I was like, it's just too weak of a market for me to be a hero here. I like a lot of companies. I like a lot of stocks here right now, but the market is so damn weak. I don't want to be a hero here and try to catch the falling knife. Like Brian Shannon always says, who was a guest on the show a couple days ago. Buy the strength after the dip. Don't buy the initial dip because you don't know how far it's going to dip. So right now, all these stocks are basically in free fall here. Even today, you have a day where the S&Ps are up substantially here. Micron is back in the red. Micron's down another 1% here today. SanDisk is back in the red here today. Western Digi is still green because it got upgraded, but there's some weakness still, follow-through weakness on some of these names.
And they were weak off the open, right? We were looking at in relationship to Friday's low for something like Micron, and if you were looking for it made its low for the week on Thursday. It didn't even stop there. It opened up, took that out, kept on going. You just lost the 50-day, 200-day is way down at 239.50. I know you like to do some of your dead cat bounce trades, and I'm like, well, what about Micron? What about SanDisk? You're like, no, man, these things are heavy. These things are heavy. Losing the 50-day for SanDisk, it's way down at 254.62. So you did have the hardware holding up, right? And you also had stocks, like Nvidia, which was holding up well. That finally took out the 170 level, a trading range since the end of November, all the way. You broke the bottom of that trading range, and then what do you know? You try and rally yesterday. You only get back to 169.45. I mean, if you can't get my Nvidia back above 170 here with a sustained bid and make it, a challenge of some of these moving. Ooh, you got a little death cross maybe working here with the 50
Ugly too.
in the 200 day.
Yeah.
I mean, yeah, war, no war. There's still some things under the hood here to worry about in this market.
It sounds like Hegseth is just continuing the same talk. Thank you, chat. Reese 4 saying if Iran is not willing to make a deal, U.S. War Department will continue with even more intensity. So it sounds like they are going to keep fighting to make a deal here, despite what the Wall Street Journal was saying there last night. And that's why we're leaking here, because this is kind of going counter to the WSJ reporting that, well, they're going to pull out no matter what. It doesn't sound like that from the press, or at least so far. Keep us updated here, because obviously we're speaking live. So keep us with those updates here going. I mean, NVIDIA, going back to the tech trade here, you could say, yeah, it's 16 times forward earnings. Looks great. I will tell you, in a bear market, nobody gives a crap about fundamentals here either. They're just selling stocks because they're getting hit hard. So is there an opportunity in all of these names? Broadcom's another one. Maybe, but again, I don't want to be the hero. I don't want to be the person. I own some of these names in my long-term retirement account, but I'm not going to come in here even as a trader and say, yeah, this doesn't make any sense. We're going to buy these things. I see Marvell ripping here right now. Is that news?
Oh, I'm not sure.
Marvell up 8, MRVL. Let's go look.
Let's go look. Let's dig
NVIDIA
for the
invests
news.
$2 billion in Marvell for AI infrastructure partnership. I'm long Marvell. I like that. We know they get the mention from NVIDIA. What I will tell you, though, is ugly trade yesterday. There's overhead supply all around here, 98 to $100 here right now. So it has not been the play. One thing for certain, in 2026, it has not been the play to buy the rip.
We're leaking more.
Buy the dip has kind of worked. Buy the rip has been absolutely disastrous. Sell the rip, short the rip has been the way. So I do see the pop in Marvell. I own it in the long-term account. I'm talking against my book here, but if you had this on for a trade, I would say thank you very much, NVIDIA, for my 10% gain, and I would sell it here right now at 96.80 if I had this on for a trade.
And I just want to point out, you guys know how I love daily highs and lows. Well, you did bolt through the high from yesterday at 96.50. Bolting almost to $99, but now you're leaking. That will be your focus number of the day for Marvell, 96.50. I just want to go back to NBIS real quickly. That cut through 100 like a hot knife through butter, easily filled that gap. But we do have news. They plan to construct a 310 megawatt AI data center in Finland. Initial capacity expected in 2027. Europe's largest AI compute sites, and supports the company's goals of exceeding 3 gigawatt of contracted power by 2026. But once again, you're running into the 50-day moving average, overhead supply. Yesterday's high is up at 102.24. I bet you a lot of people would like to see that mark from Friday at 10092. You haven't crossed the century level here yet in NBIS.
We're going to sell the rip market.
You
got another rip here on an NBIS. Do I like the stock long term? I do. But right now, I'll tell you, everything is out of favor here. So I'm not going to be a hero and tell you, yeah, this is the bottom and Nebius, we go buy it today. It's a rip. We sell rips. So if I was in Nebius, I'd probably come in here and sell the rip on it. So from a short-term trading perspective, we continue to do the same thing. The beat plays on here. The beat goes on. It's sell the rip market. The overall market here, we got obviously Hegseth talking. It sounds like it's going to continue, the war here, at least in the short term here. I mean, we're up here. We're holding up fairly well, but we know what happens. Like it seems like the market likes to go up on one Trump truth or, a Wall Street Journal article or something. It goes, the violence spikes higher and then the steady leak. We haven't leaked overnight. We've held them to this presser, but I don't know, unless Hegseth says something about, hey, operations are almost done here, and maybe he is. We're doing the live show, so we can't listen to it, but keep us posted. I mean, I don't know if the leak just steadily continues here. But the risk has always been for gaps to the upside. I wrote that down yesterday. I'm like, there's not a lot of downside gap risk. It's upside gap risk. And that's why owning stocks, actually from a short-term trading perspective, is prudent. Not when we're leaking. But overnight, it's been prudent because we seem to get these tweets overnight. Trump gets done with his day, looks at the stock market, doesn't like it, going to truth out something to make the stocks go higher. And that's what's been happening time and time again. So that has been the pattern. And the trend, my friends, is your friend.
I just want to point out, you all know how I like to differentiate between, the Globex high, the 24-hour market, and the intraday high. One thing you look at early in the session is, are we going to barrel through that pre-market high? In the good old days in the market, be up 50 handles, 5 points, take out the pre-market high, just keep on going. Yesterday, that wasn't the case. If you were looking to sell the Globex high for yesterday, you never got a look at it. Moving on, because the intraday high from yesterday was 71 and a quarter. The current high is 64.70. The Globex high was about 10 handles away from that. So that's a big area to get through early in the session. We all know we were up here yesterday, and we just couldn't catch a bounce. So I mean, we just sold off the entire day. Since we're talking on the bullish side here, when some people speak, the market listens here, right? And we haven't heard from Ackman in a while. And Bill Ackman came out. Some of the highest quality businesses in the world are trading at extremely cheap prices.
Yeah.
Ackman wrote on X, one of the best times in a long time to buy quality. He said, ignore the bears. Ignore the bears, Dennis.
Well, and again, I think Ackman, it's all about time frames. So if you're a trader, you got to be like cautious here. If you're an investor, a long-term investor, I agree with Bill Ackman. There are some good companies at reasonable valuations right now. If I didn't own any NVIDIA, would I buy it here on the dip in my long-term retirement account? Probably. I mean, there's lots of, so I don't think Bill Ackman is like offside here, crazy here, to say that the significant dip that we've got a lot from the war, and there's going to be a settlement here eventually, or some type of agreement here, eventually, that the market, pops back, or at least some of these stocks pop back. So I think Bill Ackman is right from a long-term perspective. But from a trading perspective, unfortunately, I trade every day. I can't afford to, come into stocks, watch them fall 10% on me, and get hammered in my trading account. This is my income. So my number one job as a trader is to protect your capital. Actually, as an investor, you can be more risky because you have longer, retirement here for me. I'm 49 years old, is hopefully, 15 to 20 years out still. I like to trade for a long time. Joel's never going to retire. He's going to be like Warren Buffett. Maybe he'll retire at 96 years old.
Yeah.
But I mean, for the average Joe, I mean, you're trying to build money for retirement. Buying dips in the history of the stock market has been the best strategy from a long-term perspective ever. So if I'm putting my long-term cap on here, yeah, I think there's an opportunity to put some capital to work on some names. But I've got my short-term cap here on right now, and protecting capital still in a very uncertain environment is prudent. Now, I know here he is talking by, like Ackman talking up the markets, and then he goes and tells you to buy Fannie Mae and Freddie Mac. I mean, these stocks have been utter gutter, stocks for a long time. They're not even listed on the regular exchange because they couldn't. Could they eventually come back? Yeah, but these stocks got a huge Ackman pop yesterday. So I don't know if he's out there just talking his book, trying to get these stocks to come up, taking a big position and saying, yeah, man, Fannie Mae. And then we watch it rally. How much to go up yesterday?
Oh boy! It 486 to 735 went from 14 million shares to 39 million, almost
like
40 million shares. FMCC. I mean, I don't know what in the whole interest rate, people buying how. I don't know where this whole scenario fits in. These things have been just poor performers for a long time. What I will say is you're coming up on some of the moving averages. See what happens today, right? See what happens today. See if they can at least hold the gains. A lot of times, a couple days of consolidation, maybe the move comes higher. But you got the Ackman pop. I see David Russell here in the background from TradeStation. David, if you're ready, you can give us a thumbs up. If not, we got a thumbs up. Let's roll that intro from David Russell coming to the stage. He's the vice president of global strategy over at our sponsor, TradeStation. David, how you doing today?
Great. How you guys doing?
Good. So we'll go to the markets here in a second, but the first thing that I wanted to talk to you about is AI. woohoo, right? AI, until we had this little war here. That was a big theme in the market here. So, TradeStation rolls out MCP. Could you talk a little about the AI integration at TradeStation?
Sure. So MCP means Model Context Protocol, and what it is it's kind of an established linkage between the Claude AI and the TradeStation brokerage account. So it uses the API that's already part of TradeStation, and it has the ability to look at all these sorts of things like what is your account balances, what are the option chains, a whole bunch of the other data that's available within TradeStation becomes available to the chatbot, so you can discuss things like what are my position sizing, which companies do I own that report earnings this week, what companies do I own that have gone up a lot in the last 2 months or something like that. Where should I maybe rebalance or take profits and this sort of thing? So it can look at what you have in your account. It can look at all the information that's available to TradeStation customers already, like using the platform, things like the options change, the pricing history, and a lot of that other stuff that people already use to make decisions. But you can allow that information to go to Claude, which then can help you make decisions. And I've been using it a lot for things, especially planning options trades and things. Sometimes I'll look at it and I'll say something like, here are 5 stocks I'm interested in. Which has the most attractive potential credit spread opportunity? And it will actually go through and it will rank them based on different sorts of probabilities.
That's
and it will
cool.
create a scoring. And it can actually say, well, this one is at the bottom of a certain channel. This one might be more attractive, or this one has better options pricing. And it can look at all that data and assess and apply, in real time, quantitative analytical tools, and it will do it in just in a custom basis for any customer based upon what they have or what they're interested in. So I think it's a huge game changer, and it's been a lot of fun for me to work with.
David, this is where this market is going. AI tools. I mean, obviously, you guys are going to be on the cutting edge of it, working on all your tools as well. But I mean, you think about the total package. Like, do you think we get to a situation where Claude and AI become so smart that they don't become tools, they can just execute for us? Like, hey, Claude, go make me money today. Use your TradeStation analytics and just go out there and start trading for me and make money? Or will there always need to be some type of human involvement that, we're not going to get? Like, 'cause I worry about this. I've been a full-time trader for 27 years, and I'm like, I kind of worry, like, could AI come in here and replace my analytics and stuff? Are we going to get that to that point? Or that's a long ways out yet?
No, I think we're already here.
I'm out of a job.
I think we've got. The thing is that AI, you have to basically tell it what to do. I mean, that's really the key thing, I think, and you have to set it up according to what you think is right. So I mean, from my perspective, I mean, I interact with it a lot, and I'm telling it the sort of perspective I have. I mean, the problem with AI, I think we all know, is that it'll have a tendency to kind of suck up to us. And I might say something like, I love NVIDIA here. It looks great. I was listening to you guys, and I feel exactly the same way. I'm looking at NVIDIA, Broadcom breaking these support levels. You could say, wow, Micron's a really great pullback here. Let's buy it. And it'd be like, yeah, great, let's do it. Because that's what Claude would do. It would want to flatter you. It would want to say, this is great, let's do it. And it would try to do that. So I think you have to be careful with AI, because ultimately, when you're working, especially something with like a chatbot environment, it is going to keep that overall structure of trying to, essentially, collaborate with you. And I think that's one of the things you'd have to be aware of. But if you're going to come out and say something like, like you guys were saying before, I see these stocks breaking support levels. I see early strength getting sold. What should I do with my NVIDIA today? That is when I think it's going to be useful, and it actually could step in. And I think in terms of the context we have now, I mean, you have to realize that the trader is still in charge, and AI is ultimately still just an assistant. It's an assistant that can do all kinds of math really fast, all kinds of analysis really fast. Like this morning, I was on AI just saying, what's happening with this Hegseth conference? Because I knew it was coming, and I couldn't find any headlines. I'm like, what? And it looks like it's just a big, like they're just repeating what we've heard before. So to me, it didn't seem that much of a game changer. But I think that's ultimately what we have to remember is that. So yes, it can do a lot. I think to make us better traders, and it's one of those things that TradeStation is just so committed to giving people these kinds of professional grade, innovative tools. Like, we are always trying to be on that cutting edge, for customers. And the thing is, at the end of the day, I think a lot of people, I mean, if you sit at a desk and you're some kind of knowledge worker, which in many ways traders are, you're using AI now. It's part of your workflows. And ultimately, it should be part of your workflow as a trader, as an investor. And, customers should expect their brokerage to support that, because if you're doing it for accounting or you're doing it for other kinds of research, why aren't we able to do it for trading? To me, I think that's a question we've asked, and that's a question that we're answering for our customers.
Yeah, I find working with it, some of the software that I've designed on TradeStation, talking about it, it just keeps throwing questions at you. It just keeps testing you. It keeps testing you. So, all right, let's get to the markets here, okay? Because we got the war, we got interest rates, and we got a recession, and everything, but for so long, you had the hardware, software, then you had the Nvidia and the Broadcom, and these things are kind of kept us afloat, right? Big components of the S&P here. Tell us what you're seeing in Nvidia, Broadcom, and broader implications for the market.
Well, I'm seeing breakdowns, and I think that what is interesting is that a lot of these hardware names are essentially late cycle sort of companies. Late in the cycle, you often see the most cyclical things kind of perform. Let me see if I can share my screen here. Let me
Sure, go ahead. I'm going to remove mine.
Let's see, share screen, and let's see if it allows me. Let's see. Let me see. I may have too many monitors connected, but let me see if it'll let me do it correctly. But basically, there we go. I think what matters is that we often really see here is that entire screen. Sorry, here we go. So basically, here, for example, is all right, it's Broadcom. Wait a second. Do you guys need to bring it in? There we go.
I got it.
Yep. So, I mean, for me, like we can see here, this is a topping pattern. And so, I mean, we can talk about short-term things, but I believe that in many ways you see these intermediate and long-term patterns that then will tell you what the short-term is doing. And what we're really seeing here is we are seeing a topping pattern that has developed over a long period. And NVIDIA looks almost identical. So I think this is really telling us something here. And from my perspective, this is something that this should be kind of like, what we're aware of for the next several months. This is not like a short-term sort of, a little pullback. I have to look at this and say that this is more likely an intermediate to long-term topping pattern. Now, a lot of these things, I think if the war would end tomorrow, we would still have heaviness and weakness in some of these names. And one of the reasons I say that is essentially we're in a spot here where this AI cycle, it's going to require a lot of investment still, and that investment is going to be done at higher cost going forward. And there's also going to be a lot of uncertainty about, things like Asia and a lot of these other countries. I mean, Asia is going to have a significant economic problem. The Koreas and Japan and all these things, and all that stuff is totally intermeshed with semiconductors. So from my view here, we do have an overall topping pattern. Now, if you look at something like Micron, SanDisk, Western Digital, all the, I mean, look at this support line here around 370 that Micron broke. Very sloppy topping pattern, false breakthrough there. And I think what's interesting is it was just classic where it rallied into earnings. They sold the news. So the problem with something like Micron, it's almost like silver. It's a one-way like street, and it's a one-way train. And I mean, if that train is up, it's a thing of beauty for the bulls. But the fact is that if this has had a topping pattern, it's not going to be just a nice modest pullback. It's going to be months of volatility and people selling into early strength. So I think right here, when we look, there's a lot of these names, and I was looking a lot and discussing a lot with some of our clients, some of the things like the fiber optic companies, which are in a very similar position. And I would say right here, like here's Ciena, Corning, a lot of these stocks were in spots here where they had, just gone absolutely parabolic at the end. And we've seen this when moves are at the end, you tend to see this happen. In a lot of ways, these were the companies that were kind of like the last phase. And you often kind of see in a cyclical cycle, this can be true for industrials, it can be true for energy, but like you get this final surge at the end of an overall trend. So from my perspective here, we have a lot of these names are either broken, like Micron, and potentially Broadcom and Nvidia, or they're in the process of breaking, like probably some of the fiber optic names here. So, else Taiwan Semi also is one I was just noticing yesterday that is just breaking through here. So I think from my perspective here, that's what we have. And the fact is that whatever you think about AI, it could take a 6-month pause, an 8-month pause, and there can be a lot of downside in that time before we come back to it. It's not to say AI is dead, but the fact is stocks run way ahead of themselves. I mean, everyone looks at the example of Cisco in March of 2000. I mean, that thing peaked, and then, the internet didn't go away. and Cisco only recently got back to those old highs.
25 years.
Exactly.
25 years to get back. I mean,
And these
David,
fiber optics,
the charts here, and I love the long term. Like we like to do the same thing, like a little bit longer term to try to figure out the shorter term. I love this perspective here. And I mean, when you look at these longer term charts, you're like, man, these have been incredible moves here. And some of these charts look like they're just starting to break down. I mean, It doesn't look like, we're in this, period where, this is just like just starting to turn here. And I mean, this is crowded trades 101 here too. I mean, everybody's on the AI trade, including myself in my long-term account. So, I mean, you're looking here and thinking like, is this the time to, buy the 8%, 10%, 12% dip we've seen in some of these stocks? Or is there something bigger happening here? And then the second thing would be like this question. I mean, everybody's blaming the war for the stock market going down, the war. But some of these stocks, maybe not the microns and stuff, but the software stocks were already weak before the war started. Is there two things happening here, which is what I've been arguing, is that the war trade definitely has put a negative pressure on some of these stocks, but this AI unwinding trade where it was just too simply crowded, that's kind of maybe the bigger story here for a lot of these names. I mean, Micron doesn't care about the war. This is just, a crowded trade coming unwound. So what are your thoughts here? Do you think like it all turns around if we get a deal, do these stocks, bounce and those bounces are to be sold? Or is this, like what are your thoughts here as these stocks are actually starting to break down through some key moving averages?
No, my sense is that we are kind of at the end of a cycle for now. And I think in some ways it's interesting. If you look, what we started to see in the last 6 to 8 months was a rotation to value. And we really did see the large cap growth lagging. And in my opinion, what the market was waiting for was it was waiting for inflation to come down and the Fed to start cutting. And then we were going to see your regional banks. We were going to see the small caps. We were going to see a value-led stage of this bull market. And because of various things like inflation remaining sticky and now obviously the spike in oil prices, we're not getting that. So from my view, the market was ready for a very normal sort of rotation toward a cyclical growth story. I was expecting 2026 was going to be the year of regional banks, of small caps, of things like even old-fashioned retail and home builders coming to life. And I was looking for a lot of companies that had debt that were going to be able to start refinancing that. I was hoping we were going to see a virtuous cycle of falling inflation. So I think in many ways the market was already getting to that point, because ultimately I think the thing is, we did something recently when we looked at the divergence between chips and software, and they've never had a divergence in the last few months. Like this is absolutely unprecedented sort of divergence.
Yeah.
Let me show you a chart. Let me just show you something in the S&P here. This is over on TradingView. There's a few things I have on this. One thing is I was using this to highlight the customers, how we're kind of stair-stepping lower. We've formed these 3 to 4 day consolidations. And so today we'll be kind of opening up around here in the S&P, but you can see each of these sort of clusters of candles has seen higher highs and higher lows. So I think this does remain in effect. And today, early strength could be something. We were, talking about a potential kind of probe up to the low of last Wednesday. If you look in our article we did yesterday, we had highlighted this as being the level people might look around 64.76. We had kind of identified that could be the area where people look at resistance this week, and it looks, I'm not sure we're not even going to be up as that high, but something like Wednesday's low. But now look down here at Bollinger Bandwidth. This is where I want to show this indicator at the bottom. We had incredible tightness here for a long time. So this is actually pretty worrisome if you're bullish. Because what you see is you look at other tops, you see that there was a real volatility compression at the top, like back here in February of 25, and there's other tops when this happens. So it's not always bearish when Bollinger Bandwidth compresses, but it can signal a reversal. There's a very clear topping pattern here. And there's also evidence that a lot of retail investors got in late in the game. So last week, Mark Hulbert and JP Morgan both issued 2 separate analytical pieces basically saying that there was significant retail involvement in the first part of this year, people going long. So this is starting to look like a longer term kind of a traditional kind of distributive top. So from my perspective here, we're starting to see, essentially the breaking down of these bigger names. And I think the other thing that's really important is the real weakness that we've seen in the financials. So I think here, what I'm looking for is today what kind of grabs my attention also is the potential also for some of these financials to potentially kind of to position for the next kind of 2 to 3 week swings to the downside and things maybe like JP Morgan or Blackstone. I mean, look at Blackstone here. Here it is. Basically,
Awful.
it's just consolidating. And if you look, it basically is consolidating under this low from last April. Liberation Day lows. This is back here, the tariff trade wars. We're under that. We're consolidating, and we're just moving sideways here. So I think right now I think there's a few things all going on, and I think this early strength can be treated as kind of the counter trend moves that people can fade.
All right, so you got the combination of higher inflation, you got credit weakness that we haven't even gone to yet here. It seems to me it spells a 4-letter word, and that's risk.
Yeah. And one of the things we always talk about is in this kind of market, in some ways, though, one of the ways you manage risk is you just focus on trading futures. S&P futures, it's an easy thing to focus on. Like you said today, of things like Marvell. Marvell is a stock that I had been kind of bullish on as well, and all these things. And I think essentially the thing is that in a market like this, the indexes will give you bigger moves, and it makes more sense to just focus on that. Because in a real bullish market, when there's low volatility, the index doesn't move a whole lot, and it's better to focus on individual stocks. But one of the things that we like to do at TradeStation, because we support futures and because it's basically in our DNA, now's the time to pivot, in my view, just to focus on S&P futures, because they're going to give you a clearer kind of setup. And like I said, you don't have the one-off risk of things like some company striking a deal with NVIDIA, or some company getting acquired, or a company suddenly saying, hey, we're going to cut because what you're going to start to get is you're going to start to get companies, well, we're going to cut this budget, or we're going to cut jobs, and then you're going to get that 5 to 10% rip that then gets sold. And so what I think is interesting here also, and I want to add is that we have continued to see earnings estimates go up. Now, I mean, the idea that earnings are going to continue to accelerate into this situation, I think, is implausible. And you basically have an environment of interest rates. We were expecting maybe 4 or 2 rate cuts. Now we're expecting none.
Yeah.
I mean, that environment is not going to support earnings growth. When you look at the things happening in Asia in terms of they have bona fide, energy shortages in Asia now. So I think the fact is that this is now a spot where I think the market can remain heavy for a while. And the problem is that, we want to start to see companies cut their earnings guidance. We want to start to see those numbers come down, because what you're often going to see is the market will basically, in this case, it's sell the rumor, buy the news. So it's going to be something where, the market is going to anticipate weaker growth going forward, at least for the time being. And I think that that's ultimately the situation we're in here, where we have, not all the news is fully priced in. And I would also say that the market is capable of dealing with things like, trade wars, or dealing with, those kinds of uncertainties, because they're ultimately controlled by the White House. But we're in a situation now where it's not really clear who's in control, and it's not really clear with this conflict in the Middle East when it's officially over. I think that's really the problem here, is that we don't really know what the end is. So I think at this point, it kind of does give that sense of a kind of continued heaviness. And so I think that's essentially the trend. We've had a very strong, decline. And it's not to say that it is, you can argue oversold here, but I think ultimately people are going to be looking for these kind of bullish opportunities to be selling into.
David Russell from TradeStation Group, Global Head of Market Strategy, telling us the way it is in the markets. David, really appreciate having you on, and we will get you back on again real soon. David Russell, TradeStation, thank you very much.
Great to see you guys.
Thanks, David.
Okay, all right. Well, we usually have Merger Monday, but Merger Tuesday, Dennis.
I know. XBI, hot this morning here. We got 2 mergers, both in the biotech sector. You get to a point where a lot of these major biotech names got some cash. Eli Lilly, we know has been raking it in. Obviously, you can argue valuation, you can argue lots of things here, but the bottom line is, this is a company that's trading with a pretty high multiple, and to sustain that high multiple, they're going to need growth, and they're going to need growth from other areas. So it's not surprising. I would not be surprised if Eli Lilly goes on a shopping spree in some of these smaller names. So this morning at 6:45 announced that they will acquire Centessa, which is CNTA, for $6.3 billion. This is CNTA is going to be $38 in cash
But then they've been doing this for a while here, these contingent rights, meaning that if it hits certain milestones, they can get more money. So there's another $9 in contingent rights. So meaning if the total payout comes, it would be $47 a share. Now, these contingent rights, sometimes they don't hit these targets, and they end up not getting the whole thing. So they give it a little bit of value. So basically, you're getting $38 in cash, plus kind of like a little call option, Joel, to if they hit certain targets there, and that the market is valuing that call option, a little bit over $2 because you got the time value of money there too. But the total deal could be as much as $47 here. CNTA.
All right, so this is the second day in a row that Lilly did a deal. They bought a private company yesterday that's integrating AI, right? So they're spending some money. The street is treating this a little bit differently than it did than the Cisco kid, right? They're looking this, in a positive way. I mean, they do have a lot of cash. They're using it. We'll look at Lilly here, and you're back at the 200-day, and we know what happens when you don't hold the 200-day. That 200-day comes in at 896.07. Let's just call it $900. If the street really thinks this is good, if they really thinks that long term it's going to be accretive earnings, I think we grab 900. I think we hold 900 and got a lot of overhead supply though to look at after 1100. Let's see where sellers come down. Couple bad days in the market, but so far rewarding Eli Lilly here for their deal.
And then you get another one. Biogen is buying APLS for $5.6 billion in cash. This is like $41, it looks like, and no, I don't see any contingent rights here or anything. So this looks like a done deal at 41. Stock trading 40 and a quarter. Some of these smaller ones they can close pretty quickly here, so they're not giving a huge discount on time value of money here. But it's a huge premium that Biogen is paying here as well. I mean, this is why probably BIB is getting dinged pretty good here, because you got a stock that was trading at $17, paying 41 for it. That's a big deal. That's a pretty expensive premium that they're paying here, and 5.6 billion is not a drop in the bucket. Biogen hasn't been raking in like Lilly, but it's a cash rich company. They've made money for a lot of years, so they've got the money probably to do it. Thoughts on APLS obviously going off the board 40 and a quarter to 41. But two questions for you, Joel. Is one, does this really kickstart XBI? Like, does this kickstart mergers and acquisitions happening in the biotech space? Or is this just a couple deals in a
couple deals? I mean, 2 by
3 deals
Lilly?
in 2 days.
I mean, it seems to be a trend here. I mean, these companies, Biogen has been a disaster for a long time, so they're looking for growth. I mean, we know trends. Once trends start the market, sometimes they tend to continue here. So they're looking to Lilly. They're looking to put some of their money to use. Maybe they sold some stock up there and got some cash in the bank and be able to get into the AI trade. We talk about AI expanding into other things. So like the Lilly move. We'll see if it can hold, as I said, to see if it can hold that 200-day moving average. As far as Biogen, it's just been such a horrible performer, but the bulls did step up at 180 for the entire month of March. Oh, this is the end of the quarter too. We forgot to talk about that. So let's see if the pre-market low is right in this area. Let's see if there's another successful defense here of Biogen at the 180 level. So do we want to go to our disaster of the day, Dennis?
Oh, I always like disasters. Yeah, sure. Give us the disaster of the day. PHRY, yikes. Yeah, this stock's been a disaster for a very long time. The disaster continues here. What's the headline here, Joel?
EPS miss, cut guidance, triple downgrade from JPM, Baird, and Oppenheimer, I believe. Truist from hold to buy 2. All revenue outlook lowered. Price target lowered. Everyone's jumping on this stock, and they stuck a fork in my stock too. We were on the stock trading network, and you were like, "What's
trying to find the news for Doximity?" And then we realized, it's a peer play. PHR was down, so DOCS, which has been an epic disaster here too for a while, is down as well. I mean, this is just the market that we're in. Welcome to bear markets, where trading is good. If you're trading, you're going long, short, all over the place. The trading market has been excellent. Just like Kenny said. Was it yesterday Kenny was on or the day before?
Yes, that was only Monday.
But Kenny's Tuesday. Like, it's been a fantastic trading environment, and it really has. Like I said, my trading account's at all-time highs, made new all-time highs again yesterday. Investment account, which you buy good companies at reasonable valuations, well, all those valuations are becoming more reasonable every single day. And, I own about 40 stocks in my long-term account, so it seems like you're always getting dinged on something. Today is Doximity for you. Today for me also is CEG. CEG, which we didn't talk to yet, which I have in my long-term portfolio, warning that forecast 2026 earnings are going to be slightly below analyst estimates. Now, not crazy, but I mean, here we are talking energy AI, and nothing great coming out of here. They're going to make between $11 and $12 a share is what they're talking about. Analyst estimates were up a little closer to $11.50, so it's a little bit light. But it's not a crazy valuation. I mean, 11 or 12, you're talking about 25 times earnings, 26 times earnings, so it's not nuts. But, when you warn or you have a little bit of guidance down in this environment, they hit you hard. And you know what they don't do is they don't bounce you back easily.
They don't.
So that kind of sucks. I mean, again, when you're investing can have some rough periods. I've had a long-term investing portfolio since the year 2000. I went through the 2001 tech bubble burst where, I watched the long-term account. The Qs, you think this is a bear market. You think this is bad. Here's a stat for you. The NASDAQ went from 5,100, the index itself in the year 2001 went from 5,100 to 2 years later, hit 1,100. The NASDAQ fell 81%. 8-1, not 18, 8-1. So if you think it can't get bad, it can get really ugly sometimes in these bear markets. That was like a 10-year bear market, really. Like the S&Ps, obviously we started crawling back in 2005, 2006, 2007, and then we got hammered again with the financial crisis. Like there was a long period where stocks just didn't do anything for you from the period of like 2000 to like really like 2012. They were like, just basically flat for the most part, overall. And, now obviously the last 12 years, we've seen an explosion in stock prices, Dow going from 10,000 to 50,000. And, obviously, the S&P's up substantially and the Q's up substantially here. But I mean, in the big scheme of things, if you think this 7, 8, 10% pullback is significant, it's not. This is not even, we're not even in correction territory yet in the S&P. So, I mean, we can come out here and say, yeah, we buy the dip. But Joel, I've been through the tech bubble burst. I've been through the financial crisis. I watched COVID stocks fall 30% in 3 weeks. So, I mean, we've had periods where it's been a hell of a lot worse. This doesn't feel like we're going to that period. I don't feel like we're in crisis mode here. The war, obviously, oil is a crisis situation, but I do think oil prices will eventually come in. I do think AI is going to change the world. It's valuations that are contracting, though, right now. And AI, a lot of people crowded trade, me included. A lot of these stocks are coming in substantially now.
I mean, nothing compared to the 1929 crash that I went through. I mean, I just finished that book, by the way, by Andrew Ross Sorkin.
Yeah.
Good book. It's kind of scary, some of the similarities and things that are going on right now, but I guess it wasn't the greatest book to read when taking some time off, but I recommend it. It's a good read. He did so much research for that book. I really, hats off to him on that. So if you get a chance to pick that up. Before we get let's do a good earnings. All right. Well, real quickly, I did a 50% retracement for CEG, and when stocks come out and companies come out and they tell you bad news, believe them. Okay, you don't be a hero when the company comes out and tells you this.
Not in this environment. Warnings are getting sold and they continue to be sold. This is not the environment to be buying dips on stocks. Not that it was necessarily a warning, but it's a little light. It's not like, oh my gosh, Katie barred the door, we're never going to make money again. This is going to make 11 or 12 bucks. I mean, or whatever they said, 10 to 11. I mean, it's not nothing. But again, this is not the environment to even miss earnings by a little bit. I mean, think about those staples, and some of those that have been having the food stocks.
There we go.
Warnings. It's been ugly. Like Oklo, you can talk Oklo all you want. This was a storied nuclear stock. Obviously, retail grabbed a hold of it. And this is a company that, didn't even have revenue for a while. I'm not even sure if they do have revenue yet. Maybe they have some contracts in the hopes of revenue here. But I mean, this story is completely broken. So you get a Constellation CEG. This is a company that makes real money. There is valuation, there is value support at a certain point in time below. On a company like Oklo, it's hopes and dreams. So there's no valuation support. Value investors are not touching this thing ever. So I mean, once the momentum's broken, then you have no buyers. And that's why you just see the stock continuing to go down here, because who's coming in and saying, oh, Oklo is cheap now, I'm going to come and buy it. There's no value. There's no valuation here. So it's difficult. When momentum breaks on momentum stocks, that's a disaster. And that's what we've seen happen with Oklo and a lot of other names.
All right, let's go from the bad to the good here, and I'm going to get it right. MKC, right? McCormick.
Correct.
McCormick. Ooh, what happened here?
They
What
announced the deal with Unilever. So they actually were trading higher. They had earnings here this morning, and the stock was trading higher on those earnings reports. They reported at 6:30 a.m. this morning, 17% growth, sales growth, looking good. But then, also later, they announced that this has been rumored for a while, that they're going to acquire Unilever Foods unit. They're going to pay $44.8 billion for it. They do not like you buying things in this market. This market, cash is king. How do we know cash is king? Well, it's the only thing not losing you money if you're invested right now. So when you take $44 billion, I probably have to finance this somehow to go buy Unilever's food unit, they're probably not going to like it. So this stock has basically been selling off ever since they reported that official acquisition of the unit. What's even more interesting though is Unilever, which is getting the $44.8 billion, is trading lower as well. So I mean, here's a deal that's just not working for anyone here. You'd think, oh, they're getting some cash is king. Then you just said it. Well, no, we don't like that either. So holy cow! I mean, this is a deal that's not working for anyone this morning.
Yeah, I was thinking about this one because of Cisco yesterday, and just got absolutely pounded. And then I saw the McKesson was up. They beat 66 versus 60, whatever. Sales beat, affirmed guidance. Who cares? You're doing an acquisition. The street is not looking favorable on acquisitions.
No.
I will say Bulls, McCormick Bulls. If you want to spice up this market, you better get here and defend what could be the former triple bottom here at the 51 area. You are now trading sub 51. It's all about the Bulls stepping up here in McKesson at the $51 area. Ratings. Are we going to do a few ratings here? We are up against the clock, but pick your favorite one, Dennis.
Western Digi.
Okay.
Contrarian call. It's a stock that obviously had a nice run. I mean, $150 in December, folks. And let's go out farther.
Okay.
Really, that gives you a good perspective. This stock in the tariff tantrum low in April hit $28.
Oh.
In 1 year, the stock went up 1,000%. What do you do when your stock goes up 1,000% in a year? You sell it. That is what you do. When your stock goes up 1,000%
okay,
1 year, you sell it, you say thank you to the trading gods, and you move on to bigger and better things. So we get Western Digi getting defended.
Weak.
By Bernstein here this morning. They say this, is an attractive entry point. I am going to say, are you crazy? Are you crazy? One,
yes. No, Lisa.
We have a break we're starting to break a trend. It was an ugly, ugly candle here yesterday. We have Micron and SanDisk, who are the leaders, breaking down here this morning as well. And I'm not sure if this was it was upgraded. Yeah, it was upgraded. And now you're telling me after the stock has went up 1,000% and we're finally getting some weakness that this initial dip of like 10% is the buying opportunity? Crazy. No, thank you. I would sell into the pop here this morning on Western Digi. Can I get to 255, 260? Maybe. But I would be taking the money and getting the hell out of here. Get out, like while the getting's good. The getting's still good on this thing, folks. It's still $253. It was $28. I'm not saying it's going back to $28, but with Micron and SanDisk, the leaders breaking down here, I have a hard time thinking that Western Digi and Seagate don't follow to a certain extent here.
Right.
They've all come too far, too fast, too crowded. Yes, I know memory is in demand. Yes, I know there's a bottleneck here, but this too shall pass. These are cyclical businesses here. This, my friends, is the time to sell.
Yeah, I echo those sentiments. I mean, I've been talking about selling this position in
You have it?
West Digitals. Yeah, I told you.
You got to go, the investment crank.
I got in the investment account, and but I talked about it selling it at 200. I talked about it at 240. I talked about it at 260. I talked about it at 280. I talked about it. You're eventually going to be right, when things go like that. But the best thing about the Western Digi was the spinoff of the SanDisk. So I got a little bit of SanDisk in there too. But I tell you, they are not. Don't have as many. Well, probably more positions than Dennis, but very, very, not huge size positions. But I'll tell you, when SanDisk and with Digital go down $30-$40 in a day, both of them go down. Don't look at your investment account. I'm telling you, because those smaller positions can.
Oh yeah, it's not a good time to be looking at your retirement account. It's not a good time.
No.
And again, are we going to be happy if we're buying the dip on Western Digi today? I'm not sure about that.
No, I'm not sure.
There's some opportunities here, but I don't know if after a stock goes up 1,000% in a year, they don't usually go up another 1,000%. Usually there's eventually, some profit taking. Obviously, David was on here this morning and showing us those longer term charts. And I mean, you're not even going to see the recent dip. So they think this was a dip to buy. Again, the story remains the same. I think the story has changed. I mean, the AI trade is spooked here right now. Do I think AI is going to change the world? Absolutely. Do I think there's going to be some buying opportunities in AI stocks? Absolutely. Am I buying the stock that went up 1,000% in a year? That's a cyclical business. Banking that the bottleneck in RAM and memory pricing remains? No. Cyclical businesses. I've been burned with Micron before, and everybody's telling you, how can you go wrong with Micron when it's 3 times earnings? You want to know how? Because it's a cyclical business. And if that bottleneck, we've said this before, if the bottleneck eases up, if memory prices start to actually come down, that PE will start to explode higher without those earnings. The earnings will actually come down too, because they're a price taker, not a price maker. So when you're a price taker and you're a commodity stock, and that's what Micron is, and Western Digital to a certain extent as well, you love it when your commodity price explodes. But when it comes back in, that's danger, Will Robinson. I don't know if we're going to see a crash in memory prices here or not, and right now there's there's not going to be as much investing in AI when these stocks are all going down too. You got to consider that as well. These companies aren't as rich as they were yesterday. Just like your long-term portfolio isn't as rich, some of these companies might be a little bit more conservative on their spending, especially after they watch what happened at Oracle for excessive spending. Lots to chew on.
Yeah, you had to mention Oracle there. Okay, tomorrow, April Fool's Day, right? And I'm not fooling you. We're going to have Todd Gordon, Inside Edge Capital, joining us for his technical and fundamental outlook on the markets here. What a Tuesday here on Pre-Market Prep, giving you all the information that you need to know to start your trading day. Folks, thanks for joining us. We'll see
Before we go, Michael Burry tweeting out right now. He's doing a little bit of dance, but he also said shorts are not forever. He just tweeted out. Ooh, that's a good deal. I don't want Michael Burry. I disagree with you so much, but I'll agree with you on this one. Don't marry your shorts. Why I never go short in my long-term account, very rarely, except during COVID. But never go short in your long-term account. I agree with this. Trading is for shorting. And investing on the short side is never a great idea. Shorts are not forever. That's a pretty good quote. Michael Burry, I like that one.
All right, you threw in one thing. I got to throw in one thing, too. The price action in some of the big oils yesterday is interesting to me because it made, for example, ExxonMobil made a new all-time high by a large margin, 176.41. Gave back $5 and closed at 171.47. So for those stocks,
Yep.
Exxon,
Keep going.
Chevron.
I don't
keep
want
an
you to end
eye
the
on
show.
that
I want
mark.
to. This is the time to sell these stocks in your long-term account. If you've been sitting with Oxy, and I'm speaking to you, Warren Buffett and Greg Abel, it has been the dog of all dogs. Bow, wow, wow, yippee, yo, yippee, yay, dog. And you get rewarded with a Trump war that explodes oil higher, USO higher. I don't know where the top is going to be, but I'm telling you, Warren Buffett, when they own 30% of the company, now is the time, Greg Abel, to start unloading your Oxy. Now is the time. This has come all the way back up. You've been made whole. It was a terrible buy by Warren Buffett here. And, it's going to end up working out 3 years later because of a war. I do believe still with my soul that USO is not going to remain up, forever. Could it go higher? Sure. We don't know where the top is. We don't know where this war is going. It could go a little bit higher here still too. But when you've probably got to be selling that for months to get out of that thing, I'd start unloading right now. The issue they're going to have is because they own over 10% of the company, they got to report within 48 hours. So we're going to see the first Oxy sale, and that's going to hammer the stock. But, I would start unloading that Oxy position. If I owned it, I would be starting to sell some of my oil stocks here too. If you're coming here and buying oil stocks now, you're late to the party.
Okay, folks, we got to end it. We went way over time. Brent would never let us do that. That's it. That's a wrap for today on PreMarket.